Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We'll be coming to you live from the 34th Annual Futures and Options Expo in Chicago. Joining me live at the Nasdaq booth 427, we have Kevin McPartland. He's the head of market structure research over at Greenwich Associates. And it's great to have you on because we're going to get a sneak peek into your panel taking place in about 30 minutes, U.S. Treasury trading. It's the 4-year anniversary since the Treasury flash rally. How has market structure continued to evolve in that space?
Yeah, and that's exactly what we'll talk about on the panel. It's a market that trades over $500 billion a day. It's amazing. It's the risk-free rate. I mean, we can't talk enough about how important the U.S. Treasury market is to the U.S. and then to the global economy. A lot has changed. There's a lot more transparency into the market. There's new ways of trading that weren't there before. There are new liquidity providers in the market that weren't there in the way they are today, and a number of them will be on the panel with us. We're excited to talk about it.
There's 3 topics that you're talking about specifically. The first one, regulatory and public reporting. How has that changed? Is the regulation getting more complex as we're seeing in other markets?
Yeah, well, there's reporting to regulators now, Treasury trades. That didn't exist until about a year or 2 ago, so that was a big change. It was expected that eventually we would have public reporting of Treasury trades. We don't. I think the Republican administration, in their effort to not have too many more regulations, has sort of slowed that effort down a little bit. That's still to come, but it's probably going to take a while. But that's certainly something that we'll talk about today as well.
And you're also going to mention trade execution.
Yeah, so trade execution. So there's a number of new ways of trading. The market's very electronic. Over 60% of the volume is done on the screen. There's new technology that allows dealers to send prices directly to their customers, and then the customers can aggregate those prices. Sometimes they do that through a third party, sometimes they do that on their own. The talk of having the buy side come into more anonymous markets, also a very hot topic these days.
And clearing and settlement would be the last one.
Well, right, so clearing it's not required, which is interesting given how important the product is. A lot of the main trades that are done from the primary dealer, they do clear them, but a lot of the rest of the market, some of the buy side trades, the non-bank liquidity providers, they don't clear. The economics haven't worked for them in the past. If all of those trades were cleared, that could open up the market quite a bit, create new ways to trade, and allow different market participants to interact with one another.
Do you continue to see it evolving electronically, just as the equity and other other fixed income markets have?
No question. It should only get more efficient, more transparent, and just more available to investors and everybody else who wants to be involved in that market.
All right. Well, thank you very much for joining us at FIA, and thank you for joining me throughout the day. I'm Jill Malandrino, Global